What's going on, everybody? Just make sure the sound... Yeah, there we go. Sound is on. Sound is on. Sound is working. How's everybody doing? It's Tuesday night, Tuesday evening. Financial thing, crypto, stock market, investing, live stream. I am your host, of course, as always. Hope you're having a wonderful start to the week. And what are we going to be doing today? Well, I don't really have a lot of topics on my mind last weekend, but what I did last week was thin down the trading 212 portfolio considerably. I think I did it on Friday, so I'm going to show you what that looks like and a couple of new stocks that have been added to that portfolio and how those are panning out so far. Very early days on those. So yeah, we're going to look at that. I think I'll probably make a trade. Right now it's 2:30 p.m. in the US. I want to get a couple of purchases done, or maybe one purchase in the trading 212 portfolio that I haven't had time to do today, but I want to get those done. And we'll talk a little bit about cryptocurrency, what is going on in the market. We've seen sort of a rebound, a little bit of a pump in the price of Bitcoin. We take a little bit of news look on what's going on with Bitcoin today and the general cryptocurrency market. A little bit of news on that. So, not really a huge agenda today, but if you can do me a favor and hit that thumbs up, I would most definitely appreciate it because it helps YouTube bring more people to here so we can educate. And also wanted to talk a little bit about scams out there, because I'm just seeing more and more and more scams ramping up now. Not only cryptocurrency, but general, just, you know, the amount of emails I get now with people trying to access stock trading accounts, bank accounts, credit card companies. You know, these people are putting out emails to make it look like it came from American Express or Visa just to have you click on a fake link. Be careful out there and stay vigilant, because one of my own family members is getting scammed. So we'll talk a little bit about that too, and how you can stay protected and what to watch out for. So, quick hi to everybody in the stream who is here. Colin Perry. In the Peak District, we have Robert in Crete. Paul Bagworth is here in Kenilworth. Alan Duffy. Good evening, everybody. Hello from Peter Vince. Typical British weather, showers and sunshine. And Mike is experiencing showers and hail. Isn't it June tomorrow? It's a little bit odd to have hail. Nothing is out of the ordinary with the British weather. It's very hot here in Orlando. I think it's about 30-something degrees centigrade. Nothing new. But let's get right into it, because I do want to try to get through this in about 40 to 45 minutes today. Got to hit the gym. Keep the body healthy. Yeah. Let's bring up the trading 212 account. I tell you, it was looking pretty good on Friday, and of course it was a holiday in the US yesterday, but we're taking a bit of a dip. We're up to about 17,600, and the portfolio has just sort of been a little bit stagnant. It hasn't really moved the way that I've wanted it to move, so I thought, you know what, it's time to make some changes, time to thin out the portfolio so it's a little less diversified now, which of course means more risk. As you can see now, we have just 6 stocks in the portfolio. On Friday, let me show you what we did, or what I did. Boom, boom, boom. I think this was Friday. Maybe it wasn't. Yeah, sold right here. Sold Flex. Sorry, bought some Flex, LNG, sold Diamondback Energy, and sold Occidental. We sold Too Low Oil, sold Laredo. Of course, then it went up as soon as I sold it. And ended up buying 2 new stocks, ZIM Integrated Shipping Services out of Israel, and Arch Resources. See here, we have a pretty decent sized position in Arch, which was actually doing pretty good. It was in the green by I think about 5 or 6%. And you can see today we're having a pretty rough day, about 8.9% in the red. This is not a stock that I actually found myself. This came from a esteemed investor friend of mine, so credit to him for this Arch and this ZIM trade, but I have done some research on the companies. You can see here I bought at about $161 per share, and right now we're trading at a discount of 153, so down 9.47%. I'm planning this is going to be a pretty long-term hold, and I'll tell you a little bit about Arch and what they do. But I do, while the stock is down almost 9.5%, want to pop another couple of grand into this stock. So I'm just going to do that right now live. So we got 16.49 shares. I'm going to pay that stupid FX fee of £3, but let's just go ahead and do that. And oh no, wait, no, I'm doing a sell. I actually want to do a buy. I want to buy, not sell. See, if you go too quickly, that's what can happen. So let's go ahead and buy 16.41 at about a 9.36% discount. See how quick. Oh, look at that. Partially filled. There we go. We got some at 153.27, some at 153.77, a little bit at 153.64. So now we got about 5K in Arch Resources, and then the other stock that we bought, ZIM, it's down about 10%, but again, really short term, so can't really look at those results. Obviously, would like to see it in the green. And then we're holding basically now really Canadian oil, Cenovus, which I did want to buy some more of that today, but it's also, I tend to try to buy on a red day. I don't know, something psychological about that. So 2.51% in the green. Gee, let me pull up the YouTube here so I can read your comments if you have any. Getting a lot of trading confirmations at the moment. Don't want to see your ad. There we go. Okay, so got the comments pulled up. Hey, John Morgan, Sonny Swindham. And Robert says Aston Martin shares have dropped a lot, so I had to dabble with them and they have gone up. Again with Lloyd's. I don't, how much is Lloyd's right now? That was a stock that we had in the portfolio a while ago. 44p, so gone down a little bit. I think let's see where we sold Lloyd's at. 47p, yeah. So it hasn't really done much, and that was back in April. And then in June of 2021, we sold at 48. So, yeah, it really hasn't moved much for a year. Interesting. Thanks for commenting on that. So, yeah, that's where we stand right now. We've got a little bit of cash to deploy $2,000. Probably just do that on a red day and get the rest of this portfolio out there. But, yeah, definitely slimmed it down a lot. Trying for more hit and run. Except for Arch, we're probably looking to hold that for several months, maybe a year, and we'll see what happens. But so far, these are still in the green for the most part, except for the 2 new additions. Of course, market timing is so difficult. And the portfolio is sitting at 17,201. Also, just wanted to take a look at the US equity index from Vanguard. So I have not actually checked that in a while, but I noticed the amount of stocks has gone up. I think it was about 3,900, so now they got 4,078. 718 pounds, 66p on that. And if we look at historical prices, let's have a look and see where we were a year ago. April 30th. Actually, it should be May 30th, right? Gosh, I can't believe it's almost May. That is crazy. May 30th. So, we got to click all the way down because Vanguard changed the way you can search. 665 pounds and 18p. 665.18. Let's see what the calculation is like that on that. 665.18. Now we're about 718 pounds. So up 7.9% from a year ago, which, it's not bad considering what's happened with the markets. We've had that drawdown. So if you'd have just stuck it in an index tracker, you'd have been up 7%. Now, if we look at the historic prices year to date on this US index equity tracker, which of course I always say is probably the best place for anybody who's an amateur investor just to stick money and forget about it. See where we were at the beginning of Jan 1st. So January 4th, 779 pounds and 7p. So you are able to buy it at a discount. So we're down about 7%, 7.8% year to date. So if you are looking to get in, could be an argument for saying, well, 7% is not a bad discount. Now, I do think at the moment there's a lot of uncertainty in the markets. Not financial advice, of course, but I would not be surprised to see a pullback occur at some point. Some big news coming out in June about interest rates from the US Federal Reserve obviously is going to impact these prices, but there's really just no telling when these markets are going to falter. So you have to work with what you have right now. If you're looking to get into the market, see a 7% discount is never really a bad thing. Big shipping play there. Mike says Golden Ocean might be worth looking at. Going to need bulk shipping for grain. Yeah, I like Zim because of the research that I've done into them, and I'll show you why. I was also contemplating looking at the possibility of buy-to-let, but I mean, it's really tough. I was looking down in the pool area at a small little semi-detached like this, and the price of something like this is going for about 280,000 pounds. By the time you pay stamp duty of 208 on 280, now you're at 292 plus legals on a buy-to-let. You can get, I don't know, 1,000, maybe 1,000 pounds if you're doing it through a rental agency. It's, it's not great. So you're talking about 12,000 pounds on 200. I'm going to say about 293,000 after you pay legals. So you're getting a little bit, over 4% before you've even paid tax. So the returns right now on the buy-to-let's just really not looking so great. I do see those rents continuing to increase, but 4%, you're not even keeping up with inflation. You do get some price appreciation down in the south of England, so there is that. So it's, definitely not something that shouldn't be discounted, but I'm not sure that it's really yielding all that much at the moment. Let's look at Arch. This is the stock that has been added to the portfolio. It's down around 9.11 according to this at the moment. But I have also added a bigger holding too. I have more than what is in this portfolio. I have quite a large allocation to this. And Arch is trading about 152 US dollars, a little bit under 153 US dollars, which is 130 pounds. So it's not a cheap share, and not really much dividend yield on it going forward. However, they have announced a dividend payout, I think of around $8 a share. coming up. Arch Resources, what do? They are a coal. They're in the coal business, and I found this pretty cool video because what they do is called coking. And what is coking? Coal. Coke is like we're not talking about the Coke you're thinking about, not the drinking, and certainly not the stuff that goes up people's noses. But Coke is an essential fuel and reactant in the blast furnace process for primary steel making. We know a big demand for steel at the moment, especially with shortages, and Arch is involved in producing this coal to make coking for steel making. They are estimated as the second biggest coking coal producer in the US. So they put out around, 9 million would be their target tons. And it says roughly, and this is something they put out as a sort of like a slide that they were presenting at a conference. So I'm getting some of this information from them, which I presume to be true. It says roughly 80% of Arch's coking coal output comes from low-cost longwall operations versus an average of around 30% for the U.S. industry as a whole. Arch supplies roughly 30% of the world's high-volume A coking coal, which has tremendous value as a blending agent with lesser quality coals to use for steelmaking. They also ship a ton of this coking agent coal to Europe, 45%, and about 45% to Asia, so only 5% to North America. As we know what's going on in Europe at the moment, right now, this is going to be in high demand. This is a little video that I saw about what exactly longwall mining is. I just want to show you this because it's kind of cool. They basically take these big drills and run them along the side of the coal walls. Now check this out. I get kind of fascinated by stuff like this because it seems so out of the realm of what you know about coal mining, but you can see this thing just drilling down the side and then producing the coal that way. This is all new for me. It's some pretty big machinery too. It's amazing how they actually get these things inside the ground to mine the actual coal. There's some fundamentals. Low price to earnings, 4.9x, which if you compare that to a lot of things like in the tech world, you're seeing price to earnings in the 30, 40, 50, 60x. So very reasonable price to earnings. And I believe this is one of the analyst websites that I use called Simply Wall Street. Again, these numbers are not always 100% accurate, but you can get somewhat of a picture of where the company stock value should be. So right now, this is not correct. It's not trading at 168, but fair market, according to this, about 282. I think probably, if I had to take a wild guess using the crystal ball, we are looking at somewhere in the $300 range on this stock in the future, if things do what I think they're going to do. And what's good, what I like about this company, is definitely some future growth earning warnings on here, which, no company is ever perfect. But we do have to look at the financial position of the company. So they have pretty good assets versus their liability. And particularly like this. Wait, where is the chart that I'm looking for? I think they just recently gotten rid of a lot of their debt. So here, liability versus equities. They have equity of $924 million and debt of $315 million. So you like to see that way more green than red. So they're looking like, again, and not to go too much into the ins and outs of this company because it would take a long time. But it looks pretty good. And they have a 5.27% dividend yield for those of you that like dividends. I know Dave likes dividends, so could be a good play just on that. And they are going to be paying out an $8 dividend per share coming up in the next couple of months. So yeah, what else can I tell you about Arch? Here's the dividend yield, and I forgot exactly when they're going to be paying that special dividend out, because I'm a forgetful person. Let me look that up. Hold on just one sec. This was from April 26th. They are going to be giving investors a dividend of $8.11, so $8.11 per share, as a global boom in cold has helped the U.S. the U.S. mining giant post its strongest earnings in 5 years. So they are going to be making a special dividend payout. Their usual standard dividend payout is just 25 cents per share, so that's a pretty standard, pretty big dividend payout. So I like that. Also, now the other stock that we added in the portfolio was this Zim Integrated Shipping Services, which is, of course, as it always does, taking a giant poo on me when I buy it. I tend to have that kind of luck. So definitely don't follow me, because I'd always get it right. But I've taken a look at Zim, and there's a couple of pieces of information I like about them. They're basically a company out of Israel that they lease ships, short-term leases of about 2 years, ship stuff all around the world. They say they're very similar to FedEx and UPS on the ocean. So I don't know, that sounds pretty cool. It says here, Zim had a great first quarter, and this is a Seeking Alpha article by Jonathan Weber. I think Seeking Alpha has some really good information on there. I like that website. They expect that the current quarter will be excellent as well. Next couple of months could see an increase in shipping rates due to seasonality plus supply and demand. Shipping is in great demand at the moment. They have a great balance sheet, and they have an absolutely huge dividend. It's crazy. So right now it's trading at $62.73. I'll show you what the dividend is. It's funny, the dividends show up as different amounts depending on where you look. Like this website says the current dividend yield is about 28.66%. So I mean, that's absolutely huge. That means they have a lot of cash to be able to pay out to shareholders. If you go to Dividend Max, which is another website I like to use, they just had a payout on April 4th, because I didn't quite get in on that one, because you have to be invested on the 22nd of March, so wasn't invested that time. But you would have gotten on 100 shares a $1,700 payout, so $17 per share. That's crazy. If you think the stock is trading in the 60s, and you were to get a $17 per share dividend payout, the next payment is scheduled to be $285 on 100 share at a 15.7% estimated dividend yield. So they do pay a really, really good dividend. Am I on the right one? Yes, this is Zim. Again, another company that does not have a lot of debt. $286 million is hence why they're paying out a lot of money in dividends. They have a lot of cash, a lot of physical assets, a lot of green on their balance sheets, which is really good. And they are reducing debt. So it says Zim had a negative shareholder equity 5 years ago, but it's now positive and therefore has improved. Look at this. Zim's debt is well covered by operating cash flow, 2,395%. So just that balance sheet looks really heavy. If you're a dividend investor, you don't mind taking a little bit more risk, because obviously, this stock can move, and it has. Even just today, we're down 7%. But if you have a long-term outlook you think is positive, you're getting that big dividend. I mean, look at this. This is crazy. This website says the dividend yield is 43.8%. So, and here's another thing. Price to earnings at just 1.42 right now, which is absolutely crazy. So definitely some risk involved there for sure. This is not a low risk play in the portfolio, but some serious possible upside. And that's what I'm trying to go for in this portfolio, some big upside. Look, we've already even dropped another 120 pounds off of the portfolio. I don't know. Yeah, Arch is just continuing to poo the bed. But happy, I think, with this trade. We'll see what happens. Yeah, not a huge amount as far as the portfolio goes. I did consider adding a little bit more to it, but I wanted to focus more on the stocks that I already knew. These Canadian Vermilion and Synovus, and then with the Arch trade. So we'll see what happens. Let's see if I got it right. I don't know. Sometimes I get it right. Sometimes I do not get it right. That is what investing is all about. But if you want to go read more about these stocks, I'm going to put some links in the description, in the YouTube description when I'm done with that, when I'm done with the stream. Let's see here. My thoughts are a little bit over the place today. Hello, Aki Chat. How are you? The tickers for Micah, Arch, ARCH, and Zim, ZIM. Yeah, I like seeking alpha. Get fracking, John Morgan says. What the frack? Hi, Patty. How are you? Paul Patty's in France. Do I think property prices will drop in the UK? I think it's all based on demand and supply. I've been looking for a buy-to-let for a while in a specific area, and I just haven't really seen anything for sale. And the one property I was interested in, there was something like 14 offers on it. So I think as long as that demand continues to be, as demand continues to be high on the property, of course, if there's nothing to buy, it's going to keep the prices propped up. And I'm not sure that I really see that supply, obviously, of UK property increasing either. It's just all kinds of problems at the moment with supply issues for building materials. People are generally not selling their houses. They want to pay more for the next place, so that people tend to be staying put. And I think if you factor all that in together, it points towards the prices, certainly in certain areas, not everywhere, but the prices staying kind of propped up. I think if interest rates continue to rise, that may change things, but we'll see. So far, it hasn't happened, at least in the areas I've been kind of keeping an eye on. Yeah. Mike, you said that the Zim and Arch have ex-dividend on the same day. That's why they dropped both on the 27th of May. Yeah. Paying out a lot of cash tends to obviously makes the stock price drop too. Alan says, taking a big position on Scotland beating Ukraine and Wales. What is a big position? Does that mean you bet on the game? It does make watching a game a little bit more fun if you have some money on it. But what is a big position? I'm just curious. I've never been a sports bettor. I used to have a £5 flutter on the Grand National once a year, but I've always been a little bit afraid to get kind of too addicted to betting on sports. It seems like the bookmakers know a lot more than we do. Robert says, what areas am I keeping an eye on? Generally where I'm from, in Dorset, Poole, the Bournemouth area. So I tend to, I've just, I got family close there. I know the property management company down there pretty well, so I trust them. I think that's one of the biggest issues about buying buy-to-lets is if you get a bad property management company if you're not there to handle the property yourself, which I'm not at the moment. And you get a bad company that can really destroy your return. So that's why I tend to stick to what I know when it comes to buying buy-to-lets. I know there's a couple of buy-to-let people that watch the stream, so it's always good to stay diversified, I think. Let's keep going. What else we have today? Let's look a little bit of cryptocurrency right now. We're seeing the Bitcoin greed and fear index. Still, everybody is in extreme fear right now. 16, I think it was down to 11 at one point. Not sure that I've ever seen it as low as 11. But, yes. Oh, well, here you go. Yesterday it was down at 10. So it's super low as far as on the greed side. People are scared, and a lot of it had to do with this Terra coin. Terra, the one that went down to, what is it now? Terra Classic. This really killed the cryptocurrency market. 0.00011 US cents. So fractions of a penny. You see here, at its high point, $116. People absolutely just lost their pants on this one. This was a top 10 cryptocurrency coin, which has branched into this new coin, which was airdropped to people that held that Terra coin. Now they have this new coin called Terra Luna that was released at, I think, $20. You can see everybody right here just selling out, panicking. They want to get rid of it as quickly as possible. They got really a fraction of the value of what they had invested in the other coin. So this thing went all the way down to $4 and now is back to $8.79. But still, this has been a complete mess. But if we look at the crypto market in general, actually we've had a pretty good last couple of days, making a run with Bitcoin coming up. Finally, we're seeing a little bit of positivity in the market because it certainly felt like we were in this bear market, which I think we are now at this point, but all the way down from 28,000. So we've come up to up here 32,000, so $4,000 increase on the price of Bitcoin. I don't think we're out of this bear market yet by any means. Now we've seen the cryptocurrency market really shrink down to $1.3 trillion market cap. Again, no way of really predicting what's going to happen in the future, but I am still very bullish long term on what Bitcoin is going to do. I think we could see several months of these just low bouncing around prices in this 32,000 down to 28, maybe down to 25 or 22,000. If the stock market capitulates down and the NASDAQ were to drop or correct, I fully expect to see Bitcoin do that too. And the reason is we just have a lot of institutional money now in Bitcoin, as well as retail. So no bets are off when it comes to what's going on. If you look over here, a total supply of Bitcoin is at now a hair over 19 million. So only a couple of million more coins left to mine into the market, which is very interesting because it gets harder as time goes on for these Bitcoins to be mined. So scarcity is there, demand and supply. We've got high demand, the supply is shrinking bit by bit. Every 4 years we get halving. So we have halving in 2000, and I think 24 is the next halving of the Bitcoin rewards for the miners. So we're going to see some interesting movements on the pressure on the price. News stories here. JP Morgan backs Bitcoin to rise 28%. JP Morgan is a very, very big investment bank globally. And they are expecting it to rise 28%. Says cryptocurrency are now its preferred alternative asset. Not that I really trust anything that these investment banks say, but it's very interesting some of the comments that were made in this article. They say JP Morgan sees a significant upside on Bitcoin, that its fair market price is 28% higher than its current level. The bank said in a note on Wednesday that cryptos had overtaken real estate as one of its preferred alternative assets that don't fall into typical categories such as stocks and bonds. JP Morgan says it's sticking to its view that $38,000 was a fair price for Bitcoin, which at the time of writing was $29,722. And JP Morgan says the past month's crypto market correction looks more like a capitulation relative to January and February of 2021, and going forward we see upside for Bitcoin and crypto markets more generally. I think that really makes a lot of sense if you think about what's going on with the real estate markets right now. We've got them at a very high level. Some people believe, particularly in the U.S., the U.S. real estate markets are just at their peak right now. So it would make sense that they would now discount real estate as a place to put your money. We all know the common adage of don't buy in when things are at the top. We saw it with Bitcoin. Bitcoin now 50% off of where it was several months ago. So JP Morgan believes it's a better place to put your money. Kind of a nod in the direction of Bitcoin, right or wrong. What else? Wealthy Coinbase clients are still hodling Bitcoin since December of 2020, data suggests. So Coinbase put out this report about kind of what's going on in their ecosystem of their platform. And I thought this was interesting because we saw this report. People got really freaked out about Coinbase and how they were saying if the platform were to go bankrupt, you'd likely lose all of your cryptocurrency. So if you're holding Bitcoin on Coinbase, people got very scared and they said, well, you should have your money in a hard wallet off of the platform. So they put out this report, and they wanted to show how much assets were actually on the platform, which I think was a smart thing for them to do. I'm going to show you this. Because first of all, they don't want everybody running and withdrawing their money out of the platform, because that creates pressure for them. And if there's less crypto on that platform, it means less people are buying and less people are selling, so less profits for them. But currently, they have $256 billion of assets on Coinbase's platform as of March the 31st, 2022. So a lot of crypto still being left on there. And in their investors letter, they have a breakdown here, and I'll put this in the link if you want to read it. They said at the end of Q1, this would be 2022, assets on the platform were $256 billion, down from $278 billion at the end of Q4. So not a huge reduction. I don't know. Obviously, that hasn't really changed much. It's not as if that story came out, had a lot of people withdrawing their cryptocurrency. So people do trust Coinbase as a safe place to leave their cryptocurrency. But what was very interesting about this report is assets on the platform. They have $123 billion of retail money. That's people like you and me. And then $134 billion of institutional assets. So these institutions believe in Coinbase, and they're willing to leave $134 billion of their own cryptocurrency assets sitting there in Coinbase's custody. Now, Coinbase only has a $300 million insurance policy on their cryptocurrency. So I think if the institutions felt that Coinbase was not a safe place to leave their assets, they certainly wouldn't have $134 billion of assets just sitting on there. Could be wrong about that. But you can see it's actually increased from Q1 of 2021 when institution had $122 billion. And it hasn't really decreased that much at all. Again, retail has come down from Q4 of 2021 down to $123 billion from $141 billion, but a lot of that would be from people selling off when they got scared when the markets took that really big downturn. You can see here too, 40% of all of the assets on Coinbase are in Bitcoin and 24% in Ethereum. So that is 66% of all of the cryptocurrency that Coinbase holds is just in Bitcoin and Ethereum, which goes along with those two coins being the number 1 and 2 biggest coins market cap size, and also Bitcoin being considered one of the safer assets versus all of these other coins, which are considered to be quite risky. So I thought that was pretty interesting, and if you want to go through and see their numbers, you can. I'm not going to bore you with all of that, but I definitely was interested to see how much institutional money Coinbase were actually, how many institutional assets Coinbase is actually holding inside that platform. So I'm not really worried about Coinbase and even just holding cryptocurrency assets in Coinbase at all. Let's see. This is let's see if I can zoom out just a little bit if I can. No, it's not working. Okay, hold on. Let's reset. No, that's not working. But you can see here, this is the maximum amount of Bitcoins under custody. It's a lot. It's a lot of coins. I think it's 1 million, 1.4 million. So it's definitely bounced around. You can see from 58 million in Q4 of 2020, all the way up to 1.46 million in Q1 of 2022. So Coinbase is holding 1.4 million Bitcoin. So it's a lot of Bitcoin. Down from 2.2 million in Q4. Again, comes down to fear. And you can see estimated assets under custody here in Coinbase for institutions. So institutions generally do their research. They're pretty in depth when it comes to how much of their money is at risk and what they feel. So I think if the institutions felt scared of Coinbase, they would have certainly reduced that holding. This guy, billionaire investor Bill Miller, touts Amazon and Bitcoin and warns of a new investing paradigm, takes aim at Warren Buffett's crypto critique. This guy is a very famous investor. He has a big fund called the Miller Value Fund, a hedge fund guy. I'm not a huge fan of hedge fund guys, but I always think it's interesting when these guys start talking about Bitcoin. What does he say? Let me see. Here you go. Bitcoin, number 7 point, is the only economic entity in the world where the supply is unaffected by the demand. We're talking about that 21 million Bitcoin supply that is capped out and will never change. Miller noted that if gold price soars, more people will mine gold and the supply will increase, whereas there is a fixed supply of Bitcoin. And he says, I consider Bitcoin an insurance policy against financial catastrophe. Miller gave the example of a national government privatizing a country's banks and emptying its citizens' accounts, and suggested Bitcoin would provide an escape from the seizures. Well, this is sort of worst case scenario type terms. I don't necessarily think something like that is going to happen, but nothing is out of the realm of possibilities. And Bitcoin does give you that insurance policy that you could take your little hard drive with your asset and do whatever you want, get it outside of the government's control. So I definitely think that's an interesting point. Now, Warren Buffett also commented a few weeks ago that he wouldn't give you $25 for all the Bitcoins in the world. He said, this is Buffett, said that Bitcoin is a non-productive asset and therefore he can't value it. Bill Miller says, fair enough. If the only thing that you think you can value are productive assets, then no one's making you buy it, right? So ignore it. The objective of investing is not to own productive assets. The objective is to make money. So he definitely doesn't agree with what Mr. Buffett says, which, yeah, I kind of agree with that. Jeff says, try whales for buy to let. Rents are much the same, but less capital outlay. Yeah, I just don't know enough about the Welsh marketplace and where is a good place to buy. I honestly just don't have the time to research it. It's always about time. I'd have to be reliant on someone else for the information because I know nothing. I don't think I've ever been to Wales. But I mean, there's definitely places in the UK where you can get more rent yield for sure for less expensive properties. I know the north is far better for yield. I know Dorset well, and I know that the price of the property is just appreciating constantly down there and tends to double every few years. I think maybe every 10 years. Richard said, hopefully some decent staking offers for new Luna main exchanges will help price long term. Yeah, I think the problem with that project is the trust is completely being evaporated. Maybe people are holding on to this idea that Luna can be something again one day, but I think with any investment, not only crypto but stocks too, if people lose their faith in it and everybody runs for the exits, then you see these price crashes happening. See, I think that's everything. I think that's everything I got for you today. Did we make it under an hour? 51 minutes. Yes. Okay, cool. I like the idea of having the chat up live so I can kind of see what you're talking about there. Perfect. Well, we'll be back on Thursday for the peer-to-peer lending stream. So if you didn't check it out and you missed last Thursday, we had two guests on. Last week we had Joseph Hogue, had a really interesting discussion. He's a financial analyst. And we talked about stocks, crypto. So check that out. It's in the archives. And also check out Landlord Invest. Philip last Thursday had a really good Q&A session with him. So if you're interested in Landlord Invest, check that out. And other than that, cool. I'll see you on Thursday. Hope you have a wonderful week. And take care of yourselves. Take care. Bye.